What's up, guys? Fed minutes kind of shook the market up a little bit. Sectors, the industry groups, commodities, bonds, they're all trading like the Fed is serious. They're going to raise rates. I mean, we've been through this before. Like, are we going to fall for this joke again? Is this the real deal? Well, I've got my friend hanging on the wall here, and he's a friendly reminder that at some point, the current bull market is going to wind up like our buddy here, who I don't have a name for yet. If you have a name, throw them in the comments below. I'd really appreciate that. Also, as you can tell, I've redone the office. So go ahead and click here if you want to see the office renovation video. It's a two-part video. It's about 20 minutes in total. It just shows you how I ripped this place apart, put down the flooring, laid out the desk, built the desk, set up the computers, the whole logic and reasoning. So if you want, go ahead and click that video, and you might have some fun with it. So I got a couple charts I want you to take a look at. Maybe we can set up a trade, so let's dive in. The market today was about anything that was related, like really related to where the Fed's going to set interest rates. So that's going to be anything like commodities, currencies, which are very much related to commodities, as well as interest rate sensitive sectors like staples and utilities, anything that pays a dividend. Because what happens is if the Fed's going to raise rates, people can start to make money again in bonds, so they don't need those dividends of the safer stocks. So that's kind of what's going on here. Those are the movers today. So crude oil, top side, very much related to currencies and where the Fed's setting interest rates. We have a little bit of resistance here on a little fib zone resistance right around the 45, and that's been the big chop zone for a while. Just above us is going to be 50 to 52. That's going to be a really key zone. That's going to be a quality of the initial push compared to this push, as well as this purple line's the 200% external retracement of this push up. Let's do GLD, the ETF. So here's gold. Gold kind of failed at this old high from the end of 2015, right around 125. If you do a trend line off the lows, we did break trend line support here, so that's not good. Gold is gonna suffer if the Fed's gonna raise rates, because that's gonna bring the dollar up, because that makes international investments to international investors more attractive. So as interest rates go up, dollar gets strong, and that's gonna hurt commodities. So if we're just looking at this initial push here, let's do a fib extension, low to high, and then back up. We're at the 618, and then 100% will bring us right down to this 55 EMA, and that's going to be at 118.79. Now that's going to be an equal leg measured mover symmetry. If we break through that, then the third wave Elliott stuff kicks in, and that's when we get down to 116.30 in GLD, which is going to be usually a third wave target. So this would be 1, that's 2, and then a third wave usually gets down to 1618. So that's going to be key. Implied volatility is pretty low in here. Come on, move. 29% for 29% tiles, so it's in the bottom third of its range. So it's better to be long debit spreads rather than selling credit spreads. You're not going to get much for credit spread sale. Let's take a look at the dollar UUP. That's going to be key as well. Kind of three-wave push. So we got down, up, down. We just fell short of the 100%, which is, again, that same concept I just talked about in the gold market. When you get equal leg pushes, that usually signifies a correction, and we're starting to move up. The dollar has not broken through trendline resistance yet, but it's kind of looking like we could juice up through there. So the dollar could be a good trade, and again, that's just going to press commodities lower. FXA is another one. This is the the Aussie ETF. If commodities really are breaking down, that's going to hurt the Australian dollar. This could be a good short. Implied volatility is a little juicy there. Look at that, 59th percentile. That's pretty good. So, maybe we could just go back and sell some upside call credit spreads if that commodity sell-off is going to continue. Over to the stock market, Costco is something I'm looking at with this kind of measured move down. So let's just go drawing, extensions. We're going to go down, back up to a lower high. 100% is going to be 131.40. They have earnings coming out. That's going to be 5/26, May 26. So you can get a little daring if you want to trade ahead of earnings. Volatility should continue to go up, but if we're just kind of chopping around going into earnings, I'd like to sell upside calls to get down into this post-earnings. So that's going to be a good play. Costco's a dividend payer. Got taken out one of those big Costco shopping carts that I drive around and crash into things.
Hope you liked the video. Go ahead and hit the thumbs up button if you're watching on YouTube, or subscribe if you're a YouTube member and you get these videos in real time. See you guys. You're still here? I guess you liked the video. If you did, go ahead and click the thumbs up button or subscribe to this channel directly below, and you'll get the videos in real time. Or you're gonna have 7 years of bad luck trading and you have to babysit Jake and Brody.
Can I have it? My drone is back. Thank you. Say hi. Say hi, Kiki. I crashed this into the house. It's like a piece of me's been missing. I love my drone. I got pretty good with it, but I got a little ahead of myself, and I was trying to fly it close to the house, like up into the kids' bathroom window while they're taking a bath to scare the hell out of them. And I kind of got a little too close. I had to send it back to DJI in California to get fixed. All fixed. Oh, it looks brand new. There was like a couple big like black marks here where I like crashed into the house. All better.